Well, happy Monday. It's October 7th. I want to bring you the latest data here in the Austin metro area. We have to start with mortgage rates. So you may notice that the 30-year fixed rate on the left-hand side is 6.53. That is about 40 basis points higher than we had when the Fed announced their drop in Fed rates. So what is happening? How come the mortgage rates are going up when the Fed is going down? So I've said this numerous times in previous videos. They are not directly correlated to one another. The Fed is in charge of a very short-term rate that affects credit cards, maybe how much money you're earning in a bank savings account. It less affects the yield on treasuries, which are longer term looking, especially a 10 or a 30-year treasury. They're looking more at lots and lots of data, including the job market. So one of the headlines, massive jump in mortgage rates after the jobs report. So this is where good news is bad news from a rate point of view. So the job market is doing well. There were 240,000 jobs added. The unemployment number went down, and that's good news, but it also means that they believe that could put higher pressure on wages, and also that impacts inflation, maybe keeps it a little higher for longer, which means the investors in the bond market want to get more return. So if I show you the chart right here, this is a very short, this is September 1st through today. So just over a month, the Fed announced their rate drop in here, and we were down in the 6.1 range. And you can see it's just ever so much been trickling up. Then the jobs report came out and bam, it went up almost a quarter point. Now, don't worry about that. If I click the 1 year and I go back to the peak of this year, we were at 7.5. And since then, remember, the Fed didn't make any decisions until the middle of last month. And yet mortgage rates were all over the place. But over time, they've been coming down. There was the Fed decision right there. They've trickled back up some, but I do not expect we're going to see it go up to 7 or 7.5. This might be a blip that actually is short run, and then we'll see it again start to come back down. The Fed is going to make another announcement in November, maybe another one in December. And if they stay on course, even with a couple 25 basis point cuts, it's psychological. That might be enough to bring down mortgage rates. But just know, in the short term, they have gone up since the Fed made their announcement. All right, so rates just overall have been at or above 6% for over 2 years. How is that impacting the market? This is a look at our historical sales price trend, and I've shown this a few times. This is starting back at the beginning of 2019 on the left-hand side. So this was our last, we'll call it pre-COVID year. You have your typical rise in price in the spring, and it comes down some in the fall. But then 2020, it never bell curved down. It just went straight up because we ran out of inventory. Then it skyrocketed up the next two springs. So basically, in that short amount of time, Austin went from a median home price of $300,000 to about $550,000, like crazy skyrocket, and rates went up, boom, right here. So then we had a huge fall. Each spring, we still had a little pop. You can see the median home price went up some, but the falls, meaning the season, have been when we've really seen slowdowns, and we're in another one right now. But the biggest one was in 2022, maybe the second biggest one in 2023. I'd say this is more on the third biggest one out of that group. But my guess is we're going to end the year pretty flat. We might be down a little bit, but not as severe as we saw the previous years. Now, if you've owned a property for 5 years in Austin, you're still way up. I mean, again, median home values were in the 300,000 range, and now we're up at like 425. So Austin has still appreciated fairly nicely over that time period. But the people that are getting hurt are the people that bought in mid 2021 through mid 2022. And that's a pretty sizable group. They're losing value. That's what's happened in the market. They're losing value. And that segment of the market has gone down. There are other people that maybe bought in this window and needed to sell a year or two later. They're also getting hurt. Why? Because the market is still slow and they're not getting the buyer traffic, and they're maybe not getting the price that they need to be able to move on and get some equity out of that property. This is a look at number of sales. So there was an article that came out last week, and it mentioned that across the US, we have seen the lowest number of home sales since 1995. That's, 30 years. And on top of that, we have about 70 million more people than we had in 1995. So the numbers haven't changed, but the amount of people has. So we're really slow market. This is Austin, and this is pure number of residential home sales right here. So what we're looking at is in 2019, 2021, all those, we were at or above 35,000 single family home sales. It started to drop in 2022. We only had 33,000. Last year, we only had 31,000. And this year, we still have a quarter to go, but we're sitting just under 24,000 home sales. So we have really seen buyer activity on single family homes drop off and well below what we were even pre-pandemic. So again, if you're out there, you're a seller right now, you're wondering why it's slow, this is why. We're down like 25% in terms of buyer activity compared to where we would have been maybe pre-pandemic. This is a look at where we are on active versus sold inventory at this exact moment. So as we sit in October, we're sitting around 12,500 single family homes. Don't look at the sales yet because October's only had 1 week of closings. But if I look back at last month, we only had about 2,200 home sales, single family. And at that time we had, 13,000 listings. So when you're only selling, maybe, I don't know, 6% of them. So, that means a lot of sellers are sitting around on the market waiting for that buyer. So it's still a good opportunity for buyers because of that. You have a lot of inventory, not yet a lot of competition. The rates have come down some, but it doesn't feel like it's enough to energize a new wave of buyers into the market. Let's see what's happening on the lease side. So this is looking at single family and duplex lease activity in September. So 2023 is the left-hand column, 2024 is the right-hand column. So single families, we're down about 13, almost 14% in leasing activity. The listings are also down, but just less than 1%. And then the sold price has softened some. And again, the lease, you would think if nobody's buying, everybody's leasing, right? Well, I think that's true. But we also have an oversupply in the leasing market. You have new apartment complexes. You have new build single family homes, but on top of that, on top of all the traditional rental inventory, all those sellers who can't sell their house have been converting them into rentals. And so what happens is now they're flooding the market with additional rental supply, and that is creating a slowdown in the market. We saw this number, the new listings number was much, much stronger in the spring and summer. It looks pretty on par with September, but if I went back, that's where you'd see those new listings being on the market. So single families are down about 3 to 4%. It's not terrible, but still it's slower than it was a few years back. We just leased one of my personal properties and we're about $200 less on that property than we were getting with the tenant before to get somebody in there. Days on market is higher. It's taking a little longer to lease out. On duplexes, we're probably seeing, we were seeing a little more softening. Again, this is only 1 month of activity, but leasing is down 25% fewer leases getting written. New listings were up a little bit. The sold price was dead even with last year. So they were hanging in there. We saw some deeper softening on the duplexes a few months back. I think some of that is they compete a little more with apartments than maybe a single family home does, but their days on market is higher as well. So again, you're seeing softness in both. But if you are a seller right now, obviously we're in the fourth quarter, and this typically every year is when the market tends to slow down. We will have a small segment of buyers that want to close before the end of the year. They most likely are going to write an offer in October or the first half of November. So we've got, let's call it 5 to 6 weeks, when more likely than not, that's going to be a 2024 buyer. After that point, both sellers and buyers really drop off as we get into the holidays. It doesn't mean you can't sell in that window. It's just harder. And then you'll see the pop of new buyers come out when we get into 2025. But for now, for sellers like myself who have a property on the market, I would say the next 5 to 6 weeks is critical. This is when you want to try to encourage whatever buyers are out there to make you an offer in that window. If you are a buyer right now, yes, it's not great that mortgage rates jumped up a little bit, but watch the data week by week. We have seen mortgage rates be super volatile for 2 years. I think every time a new piece of economic data comes out, it affects how bond investors are investing in these bonds. So just keep an eye on that. If something comes out and it makes it sound like things are a little worse than they should be, don't be surprised if you see the 10-year yield come down, which also means mortgage rates will come down. And keep in touch with your lender. They are the ones who can really fill you in on that data. Anyways, hopefully this was helpful. If you're looking to buy, sell, or invest in Austin, we'd love the opportunity to talk with you. And of course, if you want to follow these videos each and every week, make sure to click that subscribe button at Ryan Kelly Group on YouTube. We would love to have you as a subscriber. Now, even though the market is slow, this is one of the hottest months of activity in Austin. We have Austin City Limits Music Festival. They just wrapped up their first weekend. They've got another full weekend next weekend. We've got Formula One coming to town. We've got Texas football in town. And the weather is amazing. It's dry. We're in the 80s and 90s right now. It's clear skies every day. So October is a wonderful time to be in Austin. We're going to enjoy it, but would love to get your feedback on the market if you're looking to buy, sell, or invest. And we'll talk to you next week. Thanks.